I feel like I'm in a good position to sell my home, but not buy because of higher interest rates. What should I do? Well, it's a wash because so many homeowners that are looking to sell in this market are complaining about two things. One, we missed our chance in 2021 to sell to a buyer that will overpay for our home. Or number two, it's taking longer to sell, like 1 to 2 months more. But what they aren't realizing is the benefit that this market is giving you as a buyer, where now you have a little more time to make a decision and you're not overpaying for your next property. So, sure, interest rates are a bit higher, but so what? Buy your home at fair market value and then refinance in the future once interest rates go back down. So, like I said, it all balances out. What you missed out as a seller, you're gaining as a buyer, and vice versa. I can't wrap my head around buying a home with interest rates being where they are. Please help me understand. So, buying real estate is not a matter of interest rates, it's a matter of affordability. If interest rates don't support your monthly payment budget on, let's say, a single family home, then buy a townhouse. And if the budget doesn't support monthly payments for a townhouse, then buy a condo. And if it can't be a condo, do a mobile home. But you are always buying and experiencing the yearly appreciation, tax benefits, and cash flow if you're renting it out for more than your expenses. Dave Ramsey says debt is bad. What is your opinion? Well, I can only speak for debt in real estate, and not all debt is bad, in my opinion. You can purchase a home with a loan, rent it out, and have the rental income pay for your loan, all of your expenses, and even give you extra on the side as cash flow. This is the type of debt that you can leverage to actually help you make money. I am on the fence as to whether or not I should rent my property out to a friend. So this is a touchy subject. If you own rental properties, don't rent out to friends and family. Just don't do it. Ask every single landlord. 99% of them will say the same thing, that this is a business and it's very rare for friends and families to understand that when they're in a difficult situation. So if you value your relationships, don't accept friends and family as tenants. Can you give a practical example of the benefits of owning real estate? Sure. So there are a lot of practical reasons why it might be a good idea to own some real estate. Even the casual observer sees that the price of homes goes higher and higher over time. You can buy a $500,000 property with just 5% down, so you're using 25,000 of your own money. But when that same house appreciates 10% within the next year or two, it's now valued at 550. So your initial 25,000 just made you 50K in home equity. You've essentially doubled your money relatively quickly. Should I open an LLC to help manage my rental properties? I think you should speak to an attorney for proper guidance, but this is my opinion. I think it's a great idea if you're still managing your own property. So let's say you have an LLC that owns your property. You can open up another LLC and have that be your property management company for your rental properties. Now you can deal with your tenant as a property manager without them knowing you're a landlord. Unless they ask, then you have to disclose. What would you say is the most important thing to consider when investing in real estate? Well, if you were to ask several investors what is the one thing they truly need out of their real estate investments, the answer is always going to be cash flow. Cash flow has become much, much more elusive over the past few months. And the main reason is because the cost of borrowing money has become a lot more expensive. So we're talking about interest rates. As interest rates go up, your cash flow decreases because you are paying more for the money that you needed to borrow for that property. Is there a simple formula to decrease the vacancy rate of my rental properties? So the simplest way for a landlord and a property manager to decrease their vacancy rates is to maximize the renewal rates. So if you found great tenants who pay rent on time and respect your property and take care of it, avoid the overhead and stress associated with tenant turnover by focusing on retention. One thing you can do is maybe not raise their rent every year 5%. It seems like we are late to the game when submitting our offers. By the time we discuss, do our research on the area, etc., the property has already accepted another offer. So, submitting and writing offers is not a commitment to buy a house. When you write an offer, most of the times you will include a contingency, which is an allowance to back out of the deal and recover your deposit. So, the three main contingencies are inspection contingencies, appraisal contingencies, and loan contingencies. So, if you can't get your loan approved, or if the house doesn't appraise at value, or something is revealed during the inspection of the home, you can use these contingencies to protect yourself. So it's okay to rush and put a house under contract and then slow down when you're in contract and order all of your inspections. And if you decide you don't want the house at that point, you can back out without penalty, but at least you got in quick. Should I buy real estate or stocks? So I'm not a financial planner, but my opinion is, my preference is real estate, because you can buy a property at a deal and below market value. You can't really do that with a stock. You can't shop around for a deal on Tesla or Apple stock and find ways to get it cheaper. You can't do that. You can add value to a property. You can make it bigger. You can make it nicer. You can change its use so that it can be rented to people. There's nothing I can do owning Tesla or Apple stock to make it more valuable like I can with real estate.